Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Woohoo! Party! Da-na-na-na-na-na-na-na-na-na. Woohoo! Actually, it's so cute. Liam was singing that song yesterday. Always makes me smile when I hear him sing that. But anyway, good morning, everybody. Welcome back to the Frivolity. It is 9 o'clock on the wet coast, and actually not so wet these days. Past 5-10 years, you can definitely see the climate's changing. And we are in a heat wave, but that means that's great news for all of you guys coming to Vancouver on Monday. T-minus 3 days. Ooh, big burp too. 3 days until TRI Meetup 2019 gets going, rocking and rolling. So we're super excited about all that. I'd show you the camera image of my apartment, and it's an absolute mess. In fact, just so you all know that I'm a real person. There it is, and you can see the movers are basically in the process. All I've got is the heavy lifting stuff left, and I will be officially moved. So what a way to go, Bride. Pulling off a move and a massive TRI meetup all in one thing. Frankly speaking, I didn't think I was going to be able to do this, but it looks like it's coming together. Big shout out to Riza and Andrew for helping me with a lot of the manual labor yesterday and the day before, which I was extremely stressed about. And Shane did a great job as well. So the three locals really helped me. And I think all three guys are planning to really show you guys a good time if you do get to Vancouver here over the next couple of weeks. They are the local OGs and really, really solid guys. So thank you very much, everybody, for your help. Now, I am going to be leaving a little bit early. As you saw, my apartment's in absolute chaos. And actually, I do have the movers officially coming at 9:30 this morning. That's in about 28 minutes. And actually we were a bit fortunate this morning because we do have a special presentation actually lined up for you guys. So this should actually dovetail really nicely. We might as well do some introductions now, as always, and thank heavens we have him keeping us on the straight and narrow and keeping the bus on the road. The mayor of Vienna, driving the bus, being a dude. How you doing this morning, Alex?
Hey, sir, I'm pretty good. Glad that your moving situation is finally coming to an end, I guess.
Yeah, coming to an end. I suppose that's a good way to save it. And, the bottom line here is if I stayed in this place, it would have cost me another $3,000 Canadian per month. So I suppose I can splurge and go buy some fun toys and stuff with that saved money. So there is a bright spot to all this chaos. So thank you very much for the kind words. And if I'm not mistaken, at the same time, too, you are also relocating to Southern California, right?
Yeah, in about a week. So fingers crossed for my moving situation, I guess.
Yeah, wow. Geez, everybody. It's a world in transition. Now, as I had said earlier, I am going to be leaving here at about 20 past the hour. That's in about 10-15 minutes. That's non-negotiable for Brian today. But we are really fortunate in that one of our OGs, and I love this guy. This guy is the epitome of students. He is the epitome of good people in this world. It's one of the main reasons why I did this site to begin with. And it's people like him that keep me going day in, day out, because the time and effort that I put into educating him, I can see it actually reverberating through the universe. I mean, it's just beautiful. So we're super fortunate to have him here this morning. Stephen, the man, the myth, the legend.
Whoa.
How are you doing this morning?
Pretty good. Now you're going to make me go grab a tissue box or something. Come on,
No. It's all good, dude. It's just, you're just like Alex, you're just like Kavarkinator, you're just like Kevin, you're just like Joshua, you're just like James. I didn't realize we got James on the call here. I mean, you guys, you're the reason why I have as much enthusiasm for life and teaching and continuing on this that I do, because you're just beautiful people. And so, I don't want to butter him up too much, but we do have a special presentation by Stephen today on harmonics. And I know a lot of people, especially the current level 3ers, we got like 70 or 80 of them in the class. They're all jumping into harmonics, and you can see them all using the Sierra charts and stuff like that to find the levels and stuff. So this is perfectly timed for all of them because all of you current level 3ers, like Steven's been working with harmonics for a while, and he's got a totally awesome presentation for you guys today. So I didn't even think we even did it. How are you today, sir?
Oh, me?
Yeah.
Oh, I'm doing really good. Glad
Awesome.
to be with you guys.
Awesome.
EDs, but glad to be here today.
And so I think what we'll do is maybe I'll just do like a 5-10 minute overview of, basically what I'm seeing in the market. Nothing really earth-shatteringly new. But as we sort of approach that 20 past the hour, I got about 15 minutes. I'm going to wind things up. I'm going to hand it over to the mayor and to Steven, and they'll take you in through the end of today's broadcast. Okay, guys? That sound good? Sound like a plan? All right, cool. Okay, so where the heck should we begin? We did see, I guess, like sort of news events. The long anticipated Mueller testimony in front of the U.S. Congress happened yesterday. And interestingly enough, I got the impression that, and this was just from my take from this, is Mr. Mueller was actually sort of semi-cast as like an old doting kind of I don't know specifically what you're referring to kind of testimony when I was sort of reading the media take on how that works. And I like this site. If you want a nice little simple overview, this is the people by like CBS, their news service. It gives you a nice little sort of summary, and in here somewhere in all this mess, I was reading sort of their interpretation of how this this whole Mueller event went. So no big bombshells. I think we have been talking for a while. When I did read this sort of overview, Mueller did specifically say that he did not exonerate Mr. Trump. I'm not even quite sure why I can't find it here. It's probably like right in front of my eyes. I just can't see it. And there were 10 different instances of obstruction of justice, which what ends up happening, if I understand the U.S. legal system correctly, is if he basically wins this next election, then the statute of limitations will expire on those events, on those obstruction of justice charges, potential charges, let's say. And he said that, if he's out of public office, and does not win the next election, then the Justice Department, et cetera, can proceed on those grounds. So interesting. Mr. Trump has a lot vested in actually winning this upcoming election. And, the irony of it all is that actually when I look at, what my personal experience, what I've seen with this sort of this democracy process, as long as the economy doesn't tip over, ironically enough, I think Trump actually just walks back into office. It's going to be all hoopla and it's going to be all media and all that. But as long as the economy stays relatively okay, I think he's fine. Now, if the economy rolls over, then I think he'll be run out of town on a rail. But, basically he's like a double down, bet the house, right, kind of guy. So that's basically the impression that I got out of it. There were no bombshells out of that Mueller thing, and everything that we sort of have talked about at length on the show and on the site recently, I think basically is the same. So we'll see how that goes. Only time will tell. It's interesting to see that the tech market actually is fairly strong here. And I was looking at some of the big tech stocks. The Dow, up 0.1%. That's almost basically a non-event day. But the tech stocks seem to be catching a bid, and I was wondering why. And the interesting thing is good old Goog. The Goog has actually come back firing on all cylinders, and of course they've been pissing us off to no end, screwing with all of our hangouts on YouTube and stuff, and basically making our lives a lot more difficult. Really, the bottom line here is I think a lot of cost cutting. In their latest earnings report, that basically was reflected that they earned more money than the previous quarter where they got bitch slapped. And so as a result, the Goog is catching quite a bit here this morning. This is a pretty damn big company to be up 10% on the day. That's something like $100 billion or whatever, right? I mean, it's serious amounts of money. And interestingly enough, if you actually look at the broader market, which I thought was kind of amusing here this morning, you can actually see that it's really only Goog. Everybody else is just sort of like, well, some of them are down, some of them are up, but Goog here is standing out. And of course, it's such a huge component in the NASDAQ. It makes such a big difference. So I think we are going through that sort of earnings season play. And this is usually what happens first, second week of July. Usually May, June are relatively soft. This year, the market came back basically the end of May and went straight up since then. But now that we're into earnings season, really it's all about, do companies hit their numbers? Do they beat? And what happens following that? A good example from the smaller stocks. I've got what was the one that came out the other day? I think it was this guy. So here was an example, and you can see, of course, up and down like a horse drawers. There's an example of a company that came out with earnings that beat expectations. Stock gaps higher, of course. Everybody who's taken the level 2 course knows you can't chase up here. If you really want to own this stock, well, then draw your reload zones. And gee whiz, what a coincidence. We're going to find that reload zones just so happen to line up with those RLZ, right? There is the reload zone. And good old 78.6 just so happens to line up with a double bottom, which just so happens to line up now with a big old hole on the charts. So you can clearly see where you're supposed to be long this stock. And unfortunately, you get these earnings announcements, stock gaps higher, and of course the public comes in and they chase up top here. Wrong. And shortly thereafter, the market comes right back down, fills in the gaps. Boo, hiss, hiss, boo. So a really good example. And, I think there's lots of money to be made on a stock like this. What do you think? I mean, does that look like a half decent? I got location, I got structure. If I could just find some sort of indicator confirmation, then really I got all the reasons I need to justify taking a trade, right? We can even throw on like our little template, and gee whiz, there's a nice little bull div on MACD. So hopefully everybody looks at this and goes, yeah, okay, location, indicator confirmation, W structure. What a surprise, the stock popped up. We'll see how it goes. Only time will tell. If we can break out through the top here, then this thing's probably good for moves up top. But we'll see how it goes. I still think to a certain degree that this market is being dominated, of course, by the Fed. Does the Fed raise interest rates? Do they lower interest rates? Econs came out today. Actually, I was pretty impressed. They're not like, falling out of bed. Oh my God, the economy's collapsing. If we just do the Americans. And the sad part about it is for like the Fed, they only care really about the Americans. So sad. Not United Kingdom, United States. There we are. All right. So, GDP growth rate quarter over quarter, 2.1%. Consensus was for 1.8. Forecast was 1.7. So that actually came out better than expected. GDP price index quarter over quarter, 2.5%. So inflation's actually running a little hotter than what people expected. Can the Fed really lower interest rates if inflation's hotter than expected? Oh, Jesus. PCE, this is the personal consumption expenditures. This actually used to be, in years gone by, this used to be the most popular sort of gauge of what the Fed's going to do. You can see there was no consensus or forecast, but the previous was 0.4. And the Fed has constantly been saying they want 2% inflation, right? So the banks can maintain their little profit margin windows. And so it came 2.3%. Core personal consumption expenditure index, 1.8%, consensus 1.2. That's a little bit softer. But on balance, these aren't the kind of numbers like, oh my God, the economy's collapsing. So I'm a little bit leery about whether the Fed can really aggressively cut rates, but we'll see how it goes. The impression that I've gotten is that, Jesus. I think I have to take a call here, guys. I said I was going to go till about 20 past the hour, but it looks like it's about 16 past the hour. So I think I'm going to have to leave it at that. It looks like the movers are downstairs. So,
All right.
I think if anything, Alex, if you have a little bit to add, it would be totally cool. But I'm going to have to put myself on mute and just get this call, and I'll be back to say goodbye shortly. Okay, guys?
All right. So I don't know, Stephen, do you want to start us off with your presentation or?
Yeah, that'll be fine.
Okay, cool.
Jump into it. All right. So hope you guys can hear me well. I got my microphone close to my mouth.
Yep.
All right. So today we'll be talking about some level 1 stuff and some level 3 stuff. Now the level 1 stuff has to do with your beliefs, and like this is basic but also deep and like the most important part of the trading. And the stuff Brian tells you, but I recently read a great book and there was tons of gems in it, and it brought me back to where I needed to be to get back to making money. So also we're going to cover some level 3 stuff, harmonics, and so you level 3ers should enjoy this. It's my favorite setup, and now it's my bread and butter. So I'll give you some a brief history of how I got to this point where I found this book and got back to the basics of trading, which I had learned and then promptly forgotten apparently. So most of my capital has been built from trading altcoins, and after that from trading some options, some high time frame options, some level 3 stuff, right? But as far as day to day making money, coming to work, turning on the computer, making money from trading on a consistent basis, that is something like I never really got. I did trade Forex for a while, and that was profitable. Then I got sidetracked by altcoins. Then when I went back to try to trade day to day, making money from trading, I would trade sporadically these very high time frame harmonics, and I just wasn't making consistent money. One thing, I was trading it sporadically, and for another thing, trading was crap. So I recently had an incident where, and I'll walk you through it, so you'll see exactly. This is embarrassing, right? Because this is level 1 stuff, and here I am, a veteran, right? Level 3, graduated. Like I know, quote unquote, know the right thing to do. But what's wrong with me that I can't do the right thing? So that's what we'll be talking about today. And I'll just walk you through. This is what got me started on this. Our most recent epiphany here with trading. That's, I think, has now brought me into consistent, profitable trading. Here I am. This is a big harmonic. So for you level 1ers, this is the structure. And where you can first enter is this yellow line here, okay? So here we are. Hold on, let me get this. Over there. I'll explain this so you don't have to be a level 3er to understand exactly what went down. So the first place you can enter is here, right? So I'm shorting, right? This is a bearish harmonic. So I bought a bit to short here, right? Quite a bit. And then you have to risk all the way up to around here. This red line is your line in the sand for this harmonic, all right? So if you lose this red line, you got to get out of the trade. So here I am. I built my position here, built my second part of my position here, and now we're just wandering on this red line, right? And I've traded enough harmonics to know that this is looking dangerous, but I have too much on this trade, right? So I can't face the fact that I could be wrong, right? Like this is just bad trading. This is like embarrassing stuff. So here I am on this trade, All right, things are looking like they're coming in my favor. We're coming down, but no, we're back up, right? So we're just wandering. So I'm like, okay, whatever. So I'm holding this trade like a moron, right? Here we go. So right here, I should have been, okay, this trade has gone far enough, right? We violated the initial stab into this area. We're clearly losing this red line, which is the line in the sand for this structure, this harmonic. So right here, I should have walked away, right? But I didn't. What did I do? Liquidated my little account here, right? Embarrassing. Terrible, terrible stuff. And so there it goes. And of course, we're going into big RLZ, like 5 time frame trading. Just what was wrong with me that I couldn't act on my stop, right? Now that's the issue I want to focus in on. What was wrong with me that I couldn't just close this trade, admit I was wrong? So I found this book on Twitter. It's called, I posted a link in the chat. It's called Trading in the Zone. And if Brian could write a book and get into more detail about shifting your beliefs, it would be something pretty close to this. Really focuses on your beliefs, because that is exactly what the problem is for me. And if you're not making money from trading on a consistent basis, it's likely the problem for you as well. In fact, there's only 2 problems you can have in trading. Number one is you need an edge, right? That's your tool, right? My edge is this these harmonics here, right? So number one is your edge. If your edge isn't working more than it's failing, then you need to find another edge, because that's not an edge, right? You need to find another edge, one that works. And that's pretty easily resolved, right? Like all 3 courses are giving you tons of edges to pick and choose from and to make your own in the school. But that's number one. That's one part, right? Now the second part of successful trading is your beliefs. Now the thing about beliefs is they express themselves. This book talks a lot about beliefs. And there's a thing here. It says all active beliefs demand expression. So what belief did I have that was screwing me up and making it impossible to do what I know I need to do? So after reading the book, my bad belief basically was I thought I could predict the market. Now, I know that's wrong, right? On a conscious level, I knew that was wrong. But on an unconscious level, apparently, I believe this. Now, how do I know I believe this? The book goes into a bunch of different ways of picking at what you believe. But the one thing that applied to me, especially in this case I just showed you, do you have any difficulty setting a stop for yourself and then walking away from the trade and letting the cookies crumble where they may? Some of you might, okay, yeah, it's no problem at all. Well, in fact, that's great. But if you experience any discomfort when you're entering your trade, you're opening your trade and you're putting in your stop, you experience any discomfort whatsoever, putting in that number and setting that stop, and then walking away and not having to look at your trade on and on. Because if you do, what does that mean? So a lot of noobs, they hate placing stops. In fact, a lot of them don't. Now, why is that the case? Because when you place a stop, you're forcing yourself to admit this trade could go against me. I could be wrong. But noobs don't open a trade if they think they're going to be wrong. The whole reason they open the trade in the first place is because they think they're going to be right. Having to place a stop and admit you're wrong, there's no need for that, because why would I be opening this trade if it wasn't going to be right? Problem with this all is there's no such thing as right or wrong. Like, these are the terms that I had to lose to get to profitable trading, right? There's no right or wrong. There is the good belief here that I'm talking about is anything can happen, right? Brian says this all the time. Anything can happen in this silly game, right? You've seen it all. But and he's also like, oh, lose your opinion. The quicker you lose your opinion, better off you'll be. And that is God's honest truth right there. So let's see. I got an outline here I was following. Oh yeah. So that's another reason too. There's another pretty good point in the book. When say this was a beginner taking this trade, which I was basically acting as a beginner, right? I didn't keep my stop because, oh, how could I force myself to admit I was wrong, right? I was unconsciously believing that I could predict the market, right? You see me, I'm into Gann, right? And Gann's an amazing trader, right? And he's done some like stuff that I buy into, like call it what you want, sacred math, or like falling deep down the rabbit hole. But guess what? Gann, he was wrong too, right? He wasn't 100%. This whole concept of you got to learn to be quote unquote wrong. In fact, more accurately, you have to learn to be a true thinking in probabilities. And that's the whole point of hopefully my presentation here and the point to the book. So when a beginner has a bad trade, what do they say to themselves? Well, okay, well, this trade didn't work. Well, let's see. Either the market was out to get me, right? Which we know isn't true. The market's not out to get anyone. It's an inanimate object. It's just giving information. So they either blame the market, or if they don't blame the market, they say, well, ooh, I was wrong. Okay. Was I wrong or was my analysis wrong? Maybe I need more market analysis. Maybe I need better market analysis. But the problem is they're shifting the blame to something else. Market analysis. This is why beginners are and crappy traders are so obsessed with market analysis. Just more and more and more and more. If I just had enough information, maybe if I just had more information, maybe if I went down all these rabbit holes, right? Gann and whatever, maybe I could be right. Problem is, there's no such thing as being right. Just because you make a successful trade didn't mean you predicted the future. You were just on the right side of the probabilities, right? So the point is, anything can happen, and forming an opinion about a market is killing your anything can happen belief. And this is what my problem was. I was forming these opinions, and I couldn't face that I was wrong, right? It seems so simple, but it's very, very deep, because this was like, for me, an unconscious belief, and it was coming out. It was coming out in my trading. So the book helped me get back on the track of the book concludes with doing these exercises, which is exactly the exercises you do in level 1, right? Brian says, pick a setup, strictly follow the setup, and 20 trades, mark where you're going to take your profits. Every time you're wrong, you put it down. So that's how the book concluded. Hold on, let me look at that one. Sorry, I'm not the best teacher, guys. All right. Oh, one more point, one more gem from the book I wanted to bring out along the same vein. This, for most traders, one of the most, or beginner traders, the most painful thing is not losing a trade, but leaving money on the table. Now, why do you think that is? Maybe you guys have experienced it. Maybe really level 1ers have experienced it. Leaving money on the table can be so painful when you're just starting, because you're like, all this money I could have had, right? Now, why do you think that's more painful than actually experiencing a losing trade? And the book explains it's because you're forced to acknowledge that the fault was with you, right? The market did what you thought it was going to do. It forces you to realize, like, for some reason, I just couldn't, take the profit. So that's why it's so painful, because once again, you're operating on this belief of, I want to be right, not wrong. That's a painful thing to encounter. So that was a really interesting point. So, oh yeah, and regarding the beliefs, it's really interesting. Talking all about beliefs, how beliefs form. Beliefs influence what you actually see, right? What you actually see. There's a real great example in this book, and you've probably seen it on like some comedy shows. They send this guy out to give away free money, right? And he's out in the street saying, "Hey, free money, get your free money." And right, how many people do you think go and collect their free money? No one. Why? What do these people believe that prevents them from collecting free money? What do these people believe? What does a normal person believe about free money? Well, it doesn't exist, right? No such thing as free money. So when a person is walking down the sidewalk and they encounter this guy with the sign, "Free money, get your free money," and they have this belief that free money doesn't exist, how do they make sense of the situation, right? Well, this guy must be crazy. So they go to the other side of the sidewalk, try and keep as much distance as they can, and after they pass him, how do they feel? Relief. They made it past the crazy man. Now, the problem with this is, in this case, that wasn't the environment's intention. The environment was actually saying, get your free money. And it meant it. That was the correct interpretation of the environment. These people missed out, though they thought they were doing good. Now, do you know the only guy that actually cashed in on the free money? The only guy that had the belief that free money exists. What kind of person do you think that was? If you read this paragraph on the screen, probably notice it was a panhandler. Panhandlers believe in free money, right? That's how they operate. They're getting free money. So he asked the guy for a dime. And the guy was like, sure, here, have a dime. And he got on the bus. Point was, beliefs influence what you see. So now we'll jump into this in action with my setup. So this is where you harmonics guys will get a nice kick out of it. Let's see. All right. So first, let's look at this spreadsheet. You guys see this spreadsheet, I hope?
Right now we are seeing your screen.
Okay, thank you. I'm going to change it to selected window here. There's my beautiful face. Okay. I guess my entire screen. Application window. We'll do entire screen. That should be easy. All right. So now tell me if you see a spreadsheet.
So now you're sharing the Hangout. So we got infinity screen.
Oh man, are you seeing the spreadsheet now?
Nope.
Jeez. Sorry guys, hold on a second.
Yeah, so people are saying they really enjoy your presentation. I can just
Oh, awesome.
say the same. Yeah.
Thank you for the good feedback. Okay.
Okay. Yeah, you're good.
All right. Now this right here is worth its weight in gold. Right? This is a bit of a combo mix of a journal and a trading spreadsheet, but it's a mirror. It's a mirror into my beliefs. What am I actually believing? And so these are like obviously it's a trading ledger. So let's talk about my setup, what I'm using, and then we'll talk about how my beliefs are affecting my trades for better or for worse. The belief of anything can happen, how that helps me, and the belief that I know what's going to happen, that harms me. Right, so my setup is 5 harmonics on a 5-minute chart, and I'll show you. I'm using RSI to tell me when to get into a harmonic. Right? And I take 2/3 of my profits at Mountain Man, and I'll show you. We'll go back to a chart and you'll see this. And what other? Keep in mind some high time frame levels. Okay, for you harmonic traders, we'll get into this a little bit too. The line in the sand for like the crab and those range extension harmonics, the line in the sand is 2.0. But I have found that if I move my stop past 2.0, give the trade breathing room, this works out tremendously in my favor. So 2.5 for the initial test, I give it to 2.5 for the initial stat, right? So we'll go through this, you'll see it. Now one thing you want to point out too is last week I was just getting going with this, and I wanted to give a presentation, but I was a little confused because it seemed to work too well. And here I have 44. I got -3 lines for the top here. I got 43, 42 documented trades here. I got a win-loss rate with the harmonics of 84%. That's extremely good. In fact, it's so good that it's starting to harm my belief that anything can happen, right? So in some way, this is bad because I want losers. I want to know what it's like to be totally cool with losing. That's what's making me money, is being okay with losing. Right? Anyone can win, but it's a good trader that can lose properly, right? By not being affected and obeying the stop and moving on to the next trade. So let's click on some textbook trades. I'll go to a very recent one. Posted it as it was happening in the chat. Go back here. Yep. right, hopefully we'll get a little quicker with this. All right, now tell me, do we see a chart?
Yep.
Perfect. All right, so a 5-minute chart, I think, oh wow, you need to have big brass balls for this, huh? Well, you don't, because I don't have those, and I'm using 5-minute charts because I just would like to take a trade every day. All right, cool, man. Ask all the questions you want, and I will I will answer them later. So go ahead and feel free to write down whatever you want. All right, so here we have a beautiful crab. So this is an example of a good trade, right? And how I'm using it. So point with these harmonics is I learned in volume 3 of the harmonic trading books that if you use them with RSI, you're helping yourself out a lot. So that means that I'm only going to be looking for a harmonic if RSI is overbought, oversold. So here we have this point in time, right? So, okay, RSI is now overbought. I can start looking for harmonics, right? So nothing's happening. RSI is even more overbought, and we get this nice wick. Okay, this might be something. We're going through time, right? We're making this little better. We're going through time, we're making this. Okay, this might be a crab, right? 64.9, which is close to 61.8. So that would be either a Gartley or a crab. But you can write this down, folks. You trade harmonic traders. Gartleys have to be very, very close to 61.8. In the book, he says within 2.5%. So the fact that this is 64.9, that's not within 2.5%, right? So this is most likely going to be a crab. So my expectation for this is a crab straight away. But I have to wait, right? So we're waiting. And up we go. Now here is a textbook example. RSI is overbought here. We made a higher high in price, but RSI is lower, right? And then if we zoom in on RSI, I'll make the RSI real big. What's this shape? Nice big M. So the M, and this is the key he brings out in the book, is let the M confirm and let it bring you out of the overbought state. So it confirmed right here, and it also brought me down into the out of the overbought state. So that's a go, right? And look where price is. It's right up at the top. So how did I trade this? I bought some of my position here at 1.618, just blindly, which is my plan, so I do it. I bought some of my position right here on the wick. And then after that M confirmed, I bought the other half, which got me filled somewhere around here, right? So now the plan, right, is to take 2/3 of my profits at 61.8. So I just had to wait. And the market's going sideways and whatever. Oh, by the way, this is the New York close. I've noticed New York closes give me some tremendous trades. I'm basically wasting my time any other time of the day. It's okay to take a look, but I'm learning that I should just open my computer up at 2:30 and start looking for how the charts are looking. So 61.8, and boom, I got filled here. Things are great. So I closed 2/3 of my position, 2/3 of my short. Oh, one other thing, I'm sorry. I got to put my risk reward thing here. Okay. Let's put this in here. We actually know what's going on. All right, so I mentioned with these harmonics, you got to give them to at least 2. In fact, they'll often stab up a little farther. Right now, believe it or not, I pick just about 2.5 is my stop. If it goes past 2.5, I'll just let the thing go, just forget it. So this is what my risk reward is actually looking like. Does that even look like 1 to 2? See what it says. 1.6. You might say that's pretty crappy, right? Some of these trades, when I trade the butterfly, I got to risk all the way to 2, and my entry is down to 1.27, which is down here. My risk to reward is only like 1 to 1, or 1 to like 1.2. And normally that'd be terrible. But you remember what my win-loss ratio is on the spreadsheet. It was 80%, and it's recently gone to 84%. So I'm still very profitable. There's a chart here, a link. It shows you what if your trades, the risk-reward ratio of your trades what the required win rate is to break even. And so you can, the link is in the chat. It's called Edgewonk's Math Cheat Sheet. There might be one already like this in the library, but I put it in the chat for you guys.
So I think what you're referring to there is expected value. I guess people can look that up online. It makes basically you can calculate the profitability of your trading setup, which is like win rate versus win rate, and also taking into account risk reward.
Exactly right. Exactly right. And so if you see, if you have a risk reward of 1.5, you got to win about 40% of the time to be profitable. So I'm doing it 80% of the time. So even though Brian tells you guys, you know, and you love oneers, you should be looking for 2 to 1. You know, if you've got a setup that's profitable, it's okay. Even though it's 1 to 1.5 for me, very profitable. So anyway, this trade's going great, right? Now we're going to get into the part where I start to harm myself with my beliefs. And the bad belief, of course, is I know what's going to happen. So I'm following my trade. Everything's great. I got a third of my position open. And what do I do with that remaining third? Is I draw a trend line, right? And this is like my safety trend line. Basically, if we LJ, or if we form a W on the other side of this trend line, I close the remaining 1/3 out. And that's it. The whole trade is complete. So anyway, I'm watching this, right? Because it's New York close and it's evening. Man, this trade just starts going crazy. This remaining 1/3 of the position is now up more profit than my first 2/3. It's almost like double. I mean, look how far this has gotten. Now my risk to reward on the last third is like huge. Now it's like probably 1 to 7 or something. And we just keep going, right? So I'm taking a little bit off the table here, but the problem here now for me is I have formed an opinion about the future because I looked at the high time frame chart and I think we're in a big bot that's going somewhere to 6K. Right? Now that may or may not be right, but that's not the point. The point is I just formed an opinion about the future, and now this opinion is influencing what I'm doing on a day-to-day basis. It's influencing my actions in the market. But the only thing that should be influencing my actions in the market is my setup. So now I'm harming myself. Why? Let's take a look at what happens. I mean, this could have just went to that bot and went down to 6K, right, over time. But what happened? All right, let's see. There's my safety trend line right here, right? Sorry, it's a little confusing. Got some trend lines going all over the place. Let me delete this one. All right, so we broke past it, but no W, right? So I'm still on the trade. Okay, here we go. So if you zoom out, you don't really see this W so well on like to a 15-minute chart, but this W is here. So that should have been my first like inkling, like, okay, maybe I should start closing this thing out, right? But I didn't see this W for some reason. I looked and I didn't see it. It's the weirdest thing. It broke down harder, and that just reinforced my belief that, hey, we're going to 6K. I'm going to make a ton of money. I'm going to be right. Right? And then you see what's happening here. We form a big W here. One big giant W just well outside this trend line. This is embarrassing. I should have closed the trade right here at the latest. Right? Right here. If I was really watching, and if I had checked another hour later, I'd been somewhere around here. And if I had closed that trade, that would have been a great trade. What did I do? I didn't see it. I didn't see this W. Why? Because my belief was telling me we're going to 6K. What did the market do? It went literally right back up to where I got in. All that money left on the table because I harmed myself with this belief that I knew what was going to happen. Right? So I made a mistake, and then I realized from keeping a document, after I make a mistake, I'm prone to very bad behavior, like revenge trading, just general feelings of FOMO. Like this is a dangerous time, and only because I've had this spreadsheet do I realize, like my weakness, my distinct weakness is after making an honest mistake, revenge trading or FOMOing, right? So I know I'm most susceptible at that point in time. That's like a whole nother thing what to do then. But so that shows it. If I had closed my trade down here, it would have been a heck of a trade. Way more than the initial 1 to 1.5 risk reward. So anyway, that's an example. So you see these harmonics, they're stinking everywhere. As we can tell, Bitcoin chart is a highly harmonic chart. And in fact, you see this all the time. Like, once again, another trade came in. 1.618. And if I played this correctly, if I played this according to my trading plan, I would have sold down here and I would have reshorted way up here. And then where did the market go after that? Right back down into another profit area, right? 61.8 off this harmonic. Taking 2/3 of my profits here. And then, see. Okay. And one more example of this. I didn't draw it here, but I'll draw it now for you now. See, this was the trade we just spent all that time talking about here. This little one here. The other thing I didn't see, and I've been drawing as many harmonics as I can on the chart because I want to really see like how good are these things. And I've been trying to take every single harmonic trade that formed. Right? Look, RSI is oversold, right? So that means I can look for harmonics at this point in time or near this chart, right? It doesn't have to be the exact bar, but as long as it's nearby. Say there's a lower bar right here. That's also okay because it's in this vicinity. So after this was all said and done, I went back and I looked. Look at this here. 35.1, it should be 38.2, but it's within 5%, so it's valid. Once again, 35.5 within 38.2, it's valid. 1.618. This is just a crap. I didn't see this. But my thing says take your trades, take 2/3 profit at 2/3 profit 61.8 and let the rest ride. And my trading plan also says, I didn't mention it to you yet. If another harmonic comes in, take that one. Just reverse the trade and take the new harmonic. Right? So why didn't I see this harmonic right here? This is just a normal crap. 61.8. Draw the fibs off it. See if it would have got filled. You have to use the lowest point. I would have came close. Sometimes they only hit 0.5, which I'm going to adjust my trading plan to account for that. And anyway, the point is, like I said, you have to risk down to 2 anyway. So see, we broke down here, but how far away was that? That was only 1.96, right? Technically, this trade was still on. We hit the PRZ, so it's symmetrical. We hit 61.8, so this trade is on. And as long as we don't blast past 2, right? 2.5 is my line in the sand. We're profitable, right? What did it do? Went straight up. In fact, it took you straight up to the next harmonic, right? So you see how if I could follow my plan, I could just be monster trading this. And what's the only weakness in my plan? Not my plan. My plan's pretty good, I think. My only weakness is me, right? So let's get back to the spreadsheet here. Oh, I want to show you an example of a losing trade. You already saw that. This is a great example of losing trade. How did I know it was a losing trade? Now, in retrospect, I'll show you a newer losing trade. Let's see, it should be on this chart. Here we go. The RSI. It's up for you a bit. Another example of losing trade, because the losers are, you guys get these books or you learn about someone's new setup and oh, it's great. But the problem with these books is they don't print losers. Like, I love the harmonics guy. And there's tons of examples of working harmonic trades. But how many like pictures are there of losing trades? And in fact, I'll give him credit. There are some, but there should be more. Because you want to know what a loser looks like. Right? So this, I was playing it, it should be 50%. So this was a bat. 88.6 is the beginning of the reversal zone. And you risk up to 1, right? And RSI was overbought. So this, I could play this harmonic, right? It's over here. And there's a slight div, right? And what happened? Price just never broke down. And we violated 1. So you can see, just walk away from that trade. Get stopped out at 1 and take cookie crumbles. Wait for the next bus. And of course, price kind of chopped around and then it worked its way higher, I believe. Yeah, so you look at this big green bar. One more thing too, I'll mention harmonics specifically is even failed harmonics can kind of, they kind of say something. A failed harmonic is saying, instead of trend reversal, a failed harmonic is saying trend continuation, right? And that's generally the case with these failed harmonics. The thing is, they're very few and far between, sadly. I mean, it's good, but it's also bad for me because I would like to have more losers because we need to practice this walking away from a trade thing. Anyway, Another point I want to show you. Oh yeah, back to my spreadsheet. Window, trading ledger. All right, so what am I going to talk about here? Oh yes, the effect that mistakes have on your thing. So in that document, and just what Alex was saying, this is my little calculator for what my expected profit will be on average for each trade. Right? It's in that cheat sheet I gave you. So my win-loss is 84%, which is really high. A win-loss ratio. I'm risking 5%, and my risk-reward is, still not quite sure what that is, but even if it's just 1.5 to account for the runners, should be making on average 5.5% on every trade. All the winners and all the losers should average out to 5.5% on every trade. So what I did was I made this sheet, and I just took like my account starting balance, pasted it in, and then filled in the possible values if I stayed in each bracket, right? If I made 3% every trade, if I made 4% every trade, 5% every trade, and all the way up. And started going through this, and this proves to your unconscious how costly your mistakes are. And my mistakes are when I start to believe I know what's going to happen. So on my spreadsheet, I have all these mistakes, but see the red, boom, brings me way back down. And this just shows how costly it is, right? I should be staying somewhere in between the 6 and 5 area. And this actually isn't totally accurate. I haven't updated it. But mistakes are so costly. And this is something that I intend to do after getting another set of 20 trades documented, comparing my actual account balance to what should have been my account balance. And I tell you what, I think it's going to be a big difference. I think that's looking in the mirror. You know, that's pulling your pants down and seeing all your gross parts and how much they're costing you. So on my spreadsheet, my mistakes are highlighted in red. So let's look at a few of my mistakes because that's where the gold is. So this is I'm just getting started on this. It was a Gartley. You know, the Gartley, it's a 78.6 is where you start to enter the trade. So it's more risk, right? You have to risk down to 1. So it's more risk. So I bailed on this trade. And what happened to the trade? It worked out perfect. And I bailed on it. So in the book, there's some tenets of consistent winner. And there's 6 of them. And I have them printed on my computer, so I look at them every day. And the tenet I violated is what I put down here. I completely accept risk, or I'm willing to let go of the trade. Right? I thought the risk didn't look so great, but I should have just accepted the risk. Right? Let's see my other mistake. Red crab. I messed up the entry. See, I wasn't giving the trade enough breathing room. I exited the crab. It stabbed down to 2.36. Remember, I told you 2.5 is now my limit. It stabbed to 2.36, and I closed the trade. But so this was kind of an honest mistake. I adjusted my trading plan to account for this. But the real mistake here was after the mistake, I took a failed reversal revenge trade. I see. I was revenge trading after a mistake, and I only know I do this because I noted it, and I realized, holy crap, I don't revenge trade ever, except when I make my mistake. So this is terrible. I made another mistake. 2 mistakes in a row. This really damaged the account balance. Grab. Wait, that was the one I just talked about. Okay. Oh, I think I did them both red because there was a revenge trade in there. Oh, let's go to this one. Okay. Yeah, this was an example. Let's see if it formats well. But you're probably not going to see it without me trade. Can you see a chart? Or are you seeing a
Nope, we are on your spreadsheet.
pain in the neck? All right. So all right. So I just had the examples of me just not doing it, and most of them is because I'm not acting on my edges, right? It goes back. What do you have that makes you better than the other person? Your edges. And without your edges, I'm literally burning money. I'm literally throwing money out the window. So I have this on the top. I act on my edges, and if I miss them, I retrieve them. Which means if I am trading and I make a mistake, as soon as I realize I make that mistake, I correct it. because that's my edge. If I make a mistake, I've lost my edge. And now I'm going to burning money. I'm throwing money out my apartment window here. So as soon as I realize I make a mistake, I go get my edge back. I could give you more and more examples of this, but I think maybe I got the point made. Just looking for anything else I might be missing here. Yeah. So in conclusion, let's do a quick review. The beliefs you have are going to express themselves. So if you're having difficulty trading, it may be that your setup just isn't a very good setup. But if you back tested it and it's profitable, right? As Brian says, it's working 60% of the time, at least 60% of the time, and you're giving you a risk reward of 2 to 1. Then your problem probably is your beliefs. You might not even know you have these, but these unconscious beliefs are affecting your trading because beliefs express themselves. So this whole exercise here has been to empower the new belief, right? You can't totally erase old beliefs, but you can deactivate them, as this book explains. So I'm giving power to the new belief, and the new belief is what? Anything can happen. And the only thing that I have in this market is my edge. If I don't have that, what do I have? I got nothing, right? I'm burning money. So I think that might conclude my presentation. I think there was one more thing I'm missing about harmonics.
Well, I think that was a fabulous lesson on psychology. I really enjoyed that, and I think we should have more on that on the daily briefs, actually. So thanks so much, Stephen. I think the people really appreciate it.
Cool. Oh man, I'm sorry. It's 12:50. Man alive. I'm like Brian Jr. over here.
Well, it's good.
Right.
I think we got a really nice treat from you now that Brian is actually off in his moving van. So I think that's a perfect timing, actually, because we are at the top of the hour here. So yeah, thanks a lot, Stephen. I think Brian will actually be welcoming a lot of you on Monday in Vancouver. So I don't know if we're going to have a daily brief on Monday, but aside from that, I guess we will just keep you posted. And yeah, thanks, guys, so much. I don't know, Stephen, you have any last words for these good people, or? All right. So thanks, guys. Have a wonderful weekend. Okay, he's coming off mute.
Oh, sorry. Yeah, just you guys stick to the basics and keep on trucking and listen to Brian. Listen to what Brian says. That's all I've rehashed is what Brian has said.
All right, that's always sane advice. So thanks, guys. Have a good one, and I will see you next week. Bye, guys.